Have you ever looked at the price of something imported and just thought to yourself, how is that possible? Well, you're not wrong to be confused. Today, we're going to pull back the curtain on the secret taxes that can make the cost of goods from overseas balloon like crazy. So let's dive in.
Okay, let's start with a really classic example. You're online, you see a car fresh from the factory, and the price looks pretty good, right? $30,000. But then, by the time that exact same car lands in a local showroom, the price has just exploded. We're talking more than double. And it's not just about shipping or profit. The real story, the one that adds all that cost, begins the second that car reaches the border.
So, the very first layer of cost gets slapped on the moment a product officially enters the country. This is where the government steps in to collect its first piece of the pie, and it's all handled by the Customs Department.
This first tax is called customs duty. Now, this isn't just some random fee they came up with. It actually has three very specific jobs. First, to make money for the government. Second, to protect local businesses from foreign competition. And third, to control the flow of certain goods.
So, the big question is, how do they figure out what to tax? I mean, to calculate a tax, you need a starting number, right? This is known as the tax base. And how Customs figures out this starting value, well, it's absolutely crucial.
And this is where things get really interesting. See, when you export something, send it out of the country, it's valued free on board, or FOB. That's basically just its price at the factory door. But, and this is a huge but, when you import something, it's taxed on its CIF value. That stands for cost, insurance, and freight. So they tax the price of the product, plus the cost of insuring it on its journey, and the shipping cost to get it here. The key takeaway? The tax on imports starts from a much higher number.
Okay, so we have the value. Now, what's the tax rate? That is decided by this thing right here, the Harmonized System, or HS code. The best way to think about it is like a massive universal encyclopedia, where every single product you can possibly imagine, from a single banana to a giant bulldozer, has its own special code. And that code tells the customs officer the exact tax rate to use. And believe me, getting that code right changes everything. Let's go back to our car. Let's say a company wants to import a fully assembled vehicle, one that's ready to drive right off the boat. That car gets hit with a customs duties rate of, get this, 80%, 80. That is an enormous tax, and it's there for a very specific reason, to protect local car assembly plants and the jobs they create.
But what if that same company gets clever? What if, instead of importing a whole car, they just import all the individual pieces, the engine over here, the doors over there, the chassis, all of it meant to be put together locally?
Well, the tax rate absolutely plummets, all the way down to just 10%. This is the perfect example of the power of the HS code. You have the exact same car, just imported in a different form, and the tax bill is wildly different. It's a powerful way to encourage local manufacturing. But wait, the journey is not over, not even close. You might think that once a product makes it past customs, it's home free. But for a lot of goods, there's a whole other government department waiting in the wings with its own tax, the Excise Department.
This next hurdle is the excise tax, and you've probably heard it called by its nicknames, a sin tax or a luxury tax. Its goal is totally different from customs. This tax is specifically designed to discourage people from buying certain things, stuff the government considers a luxury or unhealthy or maybe even bad for the environment. And the list of products that get hit with this tax is really diverse. You've got the obvious ones, right? Tobacco, liquor, but it also covers a ton of other things. Sugary drinks, perfume, yachts, and, yep, our imported automobile. And for cars, the tax rate often depends on the engine size or CO2 emissions, which is a way to sort of nudge consumers toward buying greener vehicles. So we have two major taxes down. But the real price shock, the part that makes your jaw drop, comes when you see how they're combined. This is where the math gets truly painful, not just for the importer, but ultimately for you, the consumer.
Let's just walk through the whole thing. You start with the CIF value. That's the cost, insurance, and freight. Then you add that massive 80% customs duty. Now you have a much higher price. But here's the kicker. The excise tax is calculated on top of that new higher total. And it's still not over. The final tax, the value-added tax, or VAT, is then charged on the total of everything that came before it. It's like a snowball rolling down a hill.
This is literally a system of tax on tax. You're not just paying tax on the product's original price. You are paying tax on the other taxes. This compounding effect is the #1 reason why that $30,000 car from the factory is now well over double the price, and that's before the local dealer has even added a single dollar for their own markup.
So, look, understanding this crazy journey isn't just a boring accounting exercise. This whole system of taxes actually shapes our economy, it shapes how businesses operate, and it even shapes the personal choices we all make every single day.
When you boil it all down, this system is a super powerful policy tool. It protects local industries, it nudges us toward buying certain things like electric cars, and away from others like sugary drinks. It generates a ton of revenue for public services. But the direct consequence, the flip side of the coin, is that it makes imported goods, especially anything seen as a luxury, way more expensive than they would be otherwise.
Which leaves us with one last big question. The next time you see that super high price tag, what are you really looking at? Is it a smart, maybe even necessary system for managing an entire country's economy? Or is it just an unfair burden that gets passed all the way down to the average person? Well, as we've just seen, the answer is pretty complicated, and it's buried deep in the math.